Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 8th of November. All right, now just having a bit of a quick recap, see where the markets are. The US non-farm payrolls had a really good result. 530K, unemployment rate better. The average earnings weren't really rocking the house, but, you know, with that unemployment improvement in the unemployment rate and the non-farm payroll change, it really gives the a big tick as far as the Fed is with regards to their tapering announcements, fits in with everything they're doing, you know, everything's going along. Now, there's some interesting things here, right? And I don't know if you've heard the rumor or the old adage, I should say, buy the rumor, sell the fact. Now, the US economy numbers, everything's ticking away, right? On Wednesday, we've got the US CPI numbers, but we've seen a big correction here in the treasuries. It's almost like we had the build up, we've confirmed what the Fed are going to do, and then the market's taken profit, and it almost diffuses the pressure on the US bonds, right? So we've seen a big bit of a correction there. And when you look at the major currency pairs, you may be a little bit confused as to what's going on. Now, it's not, when you do see a big US number like this, and we've got the backdrop of a, you know, pretty solid US economy coming along and everything else happening, you see the US payrolls and then the currency sort of bounce back off the lows, okay? It's enough to send it down, but the currencies haven't really gone far, okay? So if anything, to me, this looks like every good aspect of the US economy is now baked into the market. The bond yields are showing that with the way they've sort of drifted lower. So to me, this is like not a number that's really strong US numbers, or it just tells me that the market is extremely long US dollars, right? So I'm starting to sort of think, and it's not really going against the grain, but I can see these things bouncing quite aggressively, these currencies. I think, so because I just think the US dollar's done, right for now. You know, if it wasn't, we would have seen a good 100-point move to the downside here after the non-farm payrolls. And we would have seen things connect together. So to me, it just doesn't make, it makes sense. I can see what's going on, but I think we may have seen the low here in a number of the dollar block pairs that moved down under 115.20, under 134.50, 73.60 in the Aussie, under 70.80 in the Kiwi. To me, it looks like these things are going to bounce, and I can see dollar CAD coming back lower as well, especially with oil back at $82. Makes good sense there. You can see that sort of dead duck bounce here on dollar Swiss, right? Dollar yen is a little bit confused with what's going on, but because you put that US number against the backdrop of the Fed and the bonds and everything else, okay, the Fed have already come out and told us what they're going to do. Right, and excuse me, got the jitters there. They have highlighted the CPI numbers, right? So we've got those on Wednesday. As I said, the yields have just rolled back over, so they are sort of out of the play at the moment. They're now just back to normal market conditions, and we are starting to get into just the equities moving by themselves, and the currency sort of looking around for direction. Right at the moment, if you look at the majors, I think the market's a little bit confused with the result from Friday's non-farm payrolls, right? They're like, okay, we've got strong US numbers, but the currencies have bounced and the dollar gave back some ground at the end. It's like, well, yeah, it looks like it's all done. So right here at the moment, the start of the Asian session for the week, we've got US equities lower, okay, pointing to a bit of a correction in the US equity market. That's leading us to a bit of, at the moment, a little bit of a risk-off day. But as I said, there is very little going on the currencies. And if anything, they look primed for a good bounce, right? As we go through the week. Now, to really see how that sort of plays out, we have to sort of wait and see what comes out this week. And if I just look at FX Street for the calendar, it's a nice and easy one to read. There's some Euro group meetings here scheduled. Now, not much else coming out Monday, Tuesday. Still got that Echo Finance Ministers meeting. I like the German zoo, more so the German zoo number than the Eurozone number. So keep a close eye on that for some idea of what's happening in Europe. You'd think with the ECB, everything coming out of lockdown, things have got to start picking up as far as sentiment goes. right? That could be the catalyst for euro to start moving back above 115.80, right? You come back in, we've got a couple of Bank of Canada, well, the governor speaking and one of the other members of the board speaking on sort of late Tuesday, early Wednesday. Then you come into the Chinese numbers aren't really sort of in play at the moment, probably worth having a look at. But the major piece for the week, right, will be Wednesday's US CPI numbers, right? This is obviously huge for just seeing what's going on. It's more about the pace of how the Fed acts. It doesn't change the plan here, right? So the numbers won't change the plan. It's just if they're really, really strong, right, above 5.3%, the year-on-year number at least, well, then we're starting to talk about, hell, maybe they have to move sooner than later. That's obviously going to be a bit of a dollar boost. If the numbers aren't right on here, all the good data is already factored into the US numbers here on all the currencies. That could be the lead where the currencies take off. All right, I'm talking about the dollar block, euro, sterling, Aussie, Kiwi, all bouncing aggressively to the top side. Okay, it's going to make a lot more sense than it did when they bounced a couple of weeks ago. Then you come into Thursday, you've got Aussie full-time employment. You've got UK, okay, manufacturing production numbers, pretty aggressive GDP numbers. Give us a real good look at, hard look at sterling, but the numbers are starting to come into play. So you want to be paying attention to that. And outside of that, Friday, well, the University of Michigan sentiment numbers there on Friday afternoon in North America, definitely worth having a look at, but you know what, the week's almost over. So really, if you're looking to get your teeth into things, or say you're looking to get some gel going, okay, get some rhythm, the CPI numbers Wednesday in North America are key to the week, right? That's the key data. You've got some other peripheral things here coming out afterwards, and it's almost better after that data comes out because that should give the US dollar some sort of momentum or direction. And then if the other numbers that come out, so the Aussie employment numbers or the UK data, you can match that up. If we've got strength in the US dollar, all we need is weakness in the other one to get a real big move. Or if the other numbers come out the same as the US numbers, well, we counteract that initial move. So Wednesday is the key pivot point. Okay, North America coming into that. I'd say, if anything, and it's a pretty sort of relaxed sort of number, is these ZEW or ZOO numbers, right? I like those. They can give you an easy lead in. And I think the dollar might start drifting well ahead of that, right? It's one of those things that it just, like I've seen this, I mean, I've been doing this for 31, 32 years. And when I look at the charts and I see a really good number, like the non-farm payrolls, you have the initial input and then it bounces. That's an alarm bell, right? That's like a, you know, even almost like the candlestick guys say, looking for shooting stars and things. It's one of those things to go below a support level like it has done on sterling and be back above it. That tells me that the dollar, as far as this move, is probably over. So I'm going to be looking to get long some of these pairs. The Kiwi's got a bit of extra work to do. Dollar CAD, as I said, it's hard to sell up here in the middle of nowhere, but keep an eye on oil. If it continues to rally, well, then we're going to see that dollar CAD move correct from the last couple of days. Dollar Swiss back in the range. Once again, highlighting that sort of like false last break to the top side, last bit of dollar strength, and we're back in the range. All right, so that's my take on it. The obviously work out what you think yourself. I mean, this is all opinion based. I just think, you know, I just can't see why the dollar would rally when the yields have pulled back and everything's sort of normal there. We had really strong US numbers, not getting the feel for it at the moment. I can see the dollar block or the US dollar just falling from here, just drifting lower, not like a massive fall unless those US CPI numbers are really weak, but the writing's on the wall and the price action suggests that the dollar may be done for now. It may take a day or so for the market to get involved. That's where those German zoo numbers come into play. If we get strong numbers there, could be enough to get euro sort of moving back above 115.80. And then that could start dragging the other pairs up and pushing the dollar down. We'll see how it plays out. Plenty to look at this week, guys. Yep, tune up your charts and get ready to trade. Cheerio.